So very good morning to all and thank you for joining us on our Qtr1 FY19 earning announcement. Present with me during this call are JP Chalsani, our Group CEO, Qtr1 our Group CFO, and our Investor Relation team. I hope you had an opportunity to review our result and investor presentations. I will share with you our overview of the industries and my team will walk through our Qtr1 FY19 performance. We will then take the questions. The bidding regulations continue to evolve, addressing all initial teething issues it faces. This will enable to streamline the future auctions and as well as its executions. As you know, the India has and central government has already completed the successful bidding of 7,500 megawatt. However, this is also resulting into elongation of the transitions period, impacting FY19 volume, which might shift to the FY20. I wish to reiterate that the government trust on renewable energy and wind specifically remain intact. The government has very ambitious the plan, and currently our whole future energy portfolio is a depend on renewables only. And this is also reflected in the revised the renewable energy target, 227 gigawatt by 2022. From the earlier 175 gigawatt, it shows very clearly the government is more interested to continue more and more renewable because its cascading period is very low, extremely cost competitive energy, bringing energy securities and mitigating the climate risk. So all aspect is the government is really seriously looking for that. But unfortunately on execution side and the new systems which is established by the central government, it's taking some more times to stabilize and synchronize with all the stakeholders. But the good news is that by last month, most of the connectivity issues and everything, I think the government has resolved, and now the streamline is happening. But still it is on the ground. Some challenges, it still remain between state and central. So going forward, it will be also stabilized. The further government has also announced the target of 30 gigawatt of offshore. Good interest and traction has started. Based on first 1 gigawatt announcement, almost 30 the investor has participates in that the investment opportunity. And the long-term plan for the offshore is 30 gigawatt will give the good visibility to establish some of the infrastructure and manufacturing capacity in the country. We are also seeing a positive policy action in other emerging area like wind, the solar hybrid and the repowering. And wind solar hybrid almost more than 4,500 the bids are in the pipelines. So there is a clear action has started. And that is the more future for the country to stabilize the grid systems. Wind and solar will come more and more projects. Wind solar hybrid is gaining tractions here with around the 5 gigawatt of bids are already in the pipelines. Till now, the 7,500 megawatt bids are already executed. And additionally, almost by current financial year is 14,000 megawatts bids are in the pipeline. Only for the wind, and some of the bids are wind solar, the hybrid. So by this financial year, the total backlog of the order pipeline of the country will be not less than 20 gigawatt. And so we strongly believe because of that, next 24 years after FY19, the 20 gigawatt will be the clear execution pipeline. Top of that, there is other market is there, but this central bidding systems will bring the 20 gigawatt business for the next 2 years. Suzlon is one of the few players having demonstrated turnkey capabilities of both wind and solar, giving us the competitive edge. And as you know, we are end-to-end solution provider last 22 years. So we have a very good competitive edge to capture this growth and opportunity on execution side. Under the new bidding regime, the long-term output for the India wind sector is extremely positive with the exceptional volume growth expected in the next 2 to 3 years. Apart from the auctions, the country has the very active market for the captive and PSU segment that continue to grow every year. Top of that, repowering market for the next 2 to 3 years is not less than 5,000 megawatt. The Suzlon has a very strong presence in this segment and are the best positions to capitalize on this opportunity as well. Thus, there are a lot of growth opportunity available in Indian market, and Suzlon being the market leader will be the obviously beneficiary. On the technology side, we will continue our R&D effort to focus on developing product with the higher energy yield. As you know, we have already achieved the 40% plus PLF product, performance on the ground and continuously reducing levelized cost of energy and to maintaining our cost competitiveness so that we remain the competitive in the bidding process and to maintain our margin and the profitability. So I now invite my team to take through our Qtr1 FY19 the performance. JPC.
Thank you, Tulsi Bhai. Thank you, Tulsi Bhai. Good morning to each one of you. In Q1 of this fiscal year, which typically is a low volume quarter, we delivered 155 megawatts in volumes and commissioned 99 megawatts. Last year, as bulk of the auctions and order book build-up happened in the second half, the first half of this year was anyway expected to be subdued. Our FY19 revenue guidance comprised of predominantly auction-based orders, 2 state PPS-based orders, and captive and PSA segment orders. A delay in connectivity approvals for the auction projects, mainly the central auction projects, have elongated the execution schedule. Thus, some of the volumes that were budgeted to be delivered in this financial year would get delivered in the next fiscal year. Volumes from state PPS based on orders, PPA-based orders will depend upon timely regulatory approval. If the approvals are received on time, large part of such orders will be executed in the current year itself, and we will still be able to achieve our guidance. Else, out of this volumes will also be shifted to next year. Volumes from captive and PSA segment, which is our one of our key areas, continues to remain on track. In light of above uncertainties, we have decided to withdraw our operational guidance while we maintained our guidance with regard to the debt reduction. On the bright side, the connectivity issues relating to the auction project is now resolved, which was one of the major bottlenecks delaying the project. CERC have released a detailed process for granting connectivity and streamlined the process. We are happy to announce that all the 4 auctions have now been cleared for connectivity. This will pave the way for a smooth execution for auctions ahead. There is a clear visibility in the bidding volumes as mentioned by Susibai in industry, and the industry is poised for a strong growth potential. Around 21 gigawatts of auctions expected to be completed by FY19 and as announced by the government from time to time. Of this, 7.5 gigawatt is already concluded in the last year, while more than 10 gigawatt is announced with deadline. Assuming full 18 months for execution, these capacities have to be commissioned before FY21. Apart from this, there will be state bids, captive and PSA segment. While due to longer execution schedules, FY19 will see lower volumes, but we expect there will be a clear ramp-up in FY20 and FY21. We are happy to note that we continue to maintain our leadership in auction regime, garnering maximum order win share. Of the 7.5 gigawatt auction till date, we bagged orders of 1.4 gigawatts. However, still around 20% of the 7.5 gigawatt capacity is open in the market, for which we are also under discussions with the clients. While we are having the largest volume share in the bidding, our focus is more on the quality of the order book rather than market share numbers, as we mentioned earlier as well. Of 1.4 gigawatt orders won by us, all are from top quality customers, including large domestic and international utilities. Substantially, all of the orders are a result of strong pre-bid tie-up and on a full turnkey basis, which is our key strength. We are not only ahead in taking orders, but also ahead in execution. We are happy to note that we have made significant progress under SECI 1 and have started executing SECI 2 projects. And our operation and maintenance business continues to grow in size with around 15 gigawatt of renewable capacity under maintenance, including 12 gigawatt from India alone. We are now we have been the second largest O&M company and continue to be so in the Indian power sector, next only to NTPC. We have a strong order backlog of 1135 megawatts plus the framework orders of 700 megawatts plus. Debt reduction, cost optimization, and working capital optimization will remain our top priority, like in FY18 and FY19 as well. I would now like to invite Kirti to take you through the detailed aspects of our financial performance before we get on to the Q&A. Kirti?
Yes. Thank you, JPC, and good morning to all of you. During Q1 of FY19, we delivered about 155 megawatt of wind capacity, contributing to overall revenue of 1,272 crore. Q1 FY19 is neither comparable with Q1 FY18, which was an exceptional due to execution of last leg of FIT orders, so it was a high volume quarter, nor with Q4 of FY18, which is generally high volume quarter. So once you compare Q and Q or YOY, both way Q1 FY19 might not be equally comparable because in both the places there are different things. Our EBITDA margin pre-Forex is at 6.1%, was impacted primarily due to low operating leverage. You may notice that we continue to keep tighter control over our fixed cost. Operation and maintenance revenues continue to remain stable at 457 crores in this quarter. Our financial performance was impacted by 254 crore Forex loss, which is purely translational in nature and non-cash. This is primarily due to impact of steep depreciation of Indian rupee against the dollar. As you know that our FCCB and SBLC-backed loan both are denominated in dollar. While our net working capital is further reduced to 2,401 crore, it continues to remain high due to ongoing transition phase. We firmly believe that the working capital in the auction regime will be significantly optimized, likewise for our working capital debt also. Our term debt excluding FCCB stand at 7,136 crore, higher by 169 crore vis-a-vis last quarter, despite the fact that we have actually repaid debt worth 150 crore. The increase is purely due to currency impact. Our repayment schedule is back-ended with only 35% of gross term debt payable over the next 4 years, while 65% is payable in FY23 and beyond, allowing the required headroom for the operations to grow. In FY19, we continue to remain committed to our target of reducing debt by 30 to 40% through combination of asset monetization and operational cash flow. Thank you all. We open the floor for questions, please.
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Puneet Gulati from HSBC. Please go ahead.
Good morning. Thank you for the opportunity. First of all, if you can help me understand, what's the progress on the O&M business. The revenue hasn't grown as much as you would have thought. Some insights on this would be helpful.
See, our OMS business predominantly is completely about the turbines what we commissioned.
Yeah.
So whatever the turbines were commissioned last year, to that extent it keeps growing the business. As we said that we are at around 12 gigawatts in India and 15 gigawatts in the overall area-wise. Our margins in the O&M business, it's an annuity business, would remain at the same level or slightly keep improving based on the efficiencies what we keep bringing in terms of percentages. So I think we're continuing to do that, and in fact, the first quarter, the performance has been significantly good.
Sorry, I thought the revenue is flat Y&Y, isn't it?
Yeah, I'll explain that. In Q1 last year, one international subsidiary revenue was added, and you are aware that we discontinued operation in one of our subsidiary, and that is why those revenue is not getting reflected in Q1 FY19. So that is the primary difference.
Okay.
And that is why it is not comparable.
Yeah, okay. Which is why probably the EBIT is higher, but revenues haven't grown.
Correct.
Yeah.
Secondly, just a bit on the gross margin side, while there is no solar revenue being recognized in this quarter, yet the gross margin is actually lower, both on, lower on Y&Y basis. Any insights on that? ASP also, if I'll just divide, your wind turbine revenue by what is delivered 155, I get a 5 crore per megawatt number, which is lower than the earlier quarter. So some insights on these would be helpful.
Would you like to answer that?
Yeah, let me take the second question first, that in F155 megawatt, whatever we have delivered, the revenue has two parts. One is a turbine supply and another is BOP. So BOP has been lower, the execution part has been lower, and that is why you see the difference. So the simple division of revenue by this megawatt may not clearly reflect the selling price. That is what I just wanted to highlight. And so far as revenue margin is concerned, margin on WTG is intact as compared to what we have guided. So there is no change. Solar revenue is not there, and some margin is not there due to solar. But on overall basis, we believe that the margin on wind turbine business continue to be in line with what we have guided.
Okay. So while you've withdrawn your operational guidance, in terms of gross margin perspective, that wouldn't have changed at all?
Yes, that's correct.
So, and any thoughts on, why not give a revised guidance, maybe lower in the light of industry transition? Why withdraw it altogether?
No, that is because at the stage where we are in, when we're talking today on 6th of August, there are still certain issues which are getting crystallized. As you know that in the July beginning, just after that the SECI 5 bids were called in fact the next 2 days, where the connectivity for the entire 4 rounds of SECI have been granted. Everybody got the connectivity on this. Now, as you are aware that wherever the connectivity is granted, Power Grid also has to enhance the capacity in some other places. Those schedules are being worked out. So therefore, the clients will try to match their schedule with respect to the Power Grid connectivity. Because as an EPC contractor, we do not take any risk towards the delay in Power Grid substation readiness on this. They're ascertaining that. So therefore, once they complete the ascertain for SECI 3 and SECI 4, when the connectivity is granted, when does the capacity would get ready, Power Grid capacity would get ready, they will finalize the exact schedule for us. So that is when we would know. Part 2, which is also we mentioned, is that in case of Andhra Pradesh, where we have a significant capacity, there were some regulatory developments during this quarter from last time when we spoke to now.
Yeah.
We submitted, we've been asked to submit application under Section 62 for tariff fixation, project-specific tariff fixation, which we have done now. The regulator has said that he will now, hence, he has given an order that he will hence go by the CRC regulations, which order has come just 2 weeks back. So therefore, now he will look at our applications and he has to give an approval under Section 62 for project-specific tariffs. Obviously, our assumption is that when we talk next time, we would have more clarity on exactly by the time it has come or it's likely to come, the regulator approval would decide how much capacity we will do. Because there are a couple of issues which are still under discussion, under resolving. So therefore, we thought there is no point in giving a guidance again and keep revising it. That's the basic reason.
Yeah, but I guess all these issues were still there around, May when you gave that guidance. So I'm wondering what has really changed in a 2-3 months time.
Two things. Two things happened. I don't think it is. When we were there in the last quarter, when we gave this guidance, it was expected that the power grid connectivity will come much faster than what it came finally in the July first week. Okay. Around July 10th on this. It was not what was expected. Okay. Second is that wherever they given the connectivity, which they gave at 220 kV level, there is some capacity enhancement required. So obviously the clients, as I said, that as it do not, I repeat, we do not take the risk of in power grid, submit. Clients would like to ascertain completely exactly when it is coming, they will give it. That was not there last time. And AP Regulatory Commission orders, which I mentioned to you, are the developments post what we gave our guidance. These are based on the subsequent the developments happened and which are there today.
Okay. Lastly, now that you know...
sorry, Mr. Gulati, I just wanted to add one thing that whatever we have estimated as a revenue, nothing is getting lost. Due to execution delays, part of the revenue might shift from FY19 to FY20.
Yeah.
That's a good point. That's right.
Yeah. So basically FY19 could still be weak, which essentially means your free cash flows would be lesser, but you maintained your debt reduction target. So is there any progress on the asset monetization program here?
If you would like to answer.
Yes, asset monetization program is on track and we are committed to deliver that in this financial year, and we are making significant progress on whatever we have planned in each of the assets.
Okay. Can you just refresh the plan again?
I think we have not given the details of the plan due to commercial sensitivity, and that is why I am sorry, but I will not be able to elaborate the details of that.
Okay, that's great. That's all from my side. I'll come back in the queue. Thank you.
Thank you. We take the next question from the line of Mohit Kumar from IDFC Securities. Please go ahead.
Hello. Good afternoon, sir.
Good afternoon.
Yeah, sir, my question pertains to, given the fact there is transmission evacuation constraints which keeps coming up, does it mean that SECI 5, 6, 7, and 8 will essentially be delayed, and also the various auction which are saying like solar hybrid and all those, if those are delayed, it means that FY19 is 3 gigawatt as per your new projection. FY20 could again be, the lower estimate. I understand that 7.5 gigawatt has been auctioned, but out of 7.5 gigawatt, another 500 megawatt, I think, of the Maharashtra has not been awarded. Besides Gujarat, the new thing has been cancelled. The SECI 5 has been cancelled. So how do you see, going forward the auction pipeline to materialize over the next 8 to 9 months?
On the transmission, which you said, I'll slightly modify your statement. While I agree, transmission is the one which has delayed initial thing. It is not the lack of evacuation facility. I feel it is lack of a coordination between the bidding and the making the transmission capacity available on it. Initial few biddings when it happened, you're seeing that the SECI was going ahead with the bidding, and there was not much of a coordination between SECI and the power grid, also because there were no clear guidelines with respect to the connectivity and etc. If you have seen it now from the SECI 5 onwards, the SECI started giving the guidance with respect to the capacity available at various substations. Though that's a guidance, there could be more substations coming on this, but there is a guidance. Now the coordination between the SECI and the power grid has started. At least in my clear discussions with the power grid and the Ministry of Power and other places, it's very clear that power grid there is a capacity, there are substations, but you need an augmentation of substation capacity. They're very clear with the current schedule of 18 to 21 months, in fact 21 months from the LOA, they can easily set up this capacity provided they are told upfront. And earlier that was not happening because that connectivity process was not there. Now we know that. So therefore, I think it's more of a lack of a coordination than the lack of the transmission capacity, which has actually caused this problem. As Suzlon mentioned in his opening comments, those things are now having behind us. There's better coordination between SECI and Power Grid. These things, I expect that these things would happen now between the two on this. And the SECI 5, the SECI 5 is cancellation, and to my knowledge, if you see that SECI 5 bidding happened to be just a day before the connectivities were granted. I think if the SECI 5 had happened post those 2 days of connectivity where all the 4 rounds of SECIs have been granted connectivity, I think the result would have been different. Now SECI 5 is, from that angle, is cancelled, but if you see the SECI 6, it was there, they renamed the SECI 5 and then put it as 1,200 megawatts and the bid is due on 24th of August. And these are the teething troubles what we're going through, and it's good that we're facing these issues upfront and getting resolved things. So therefore, we think that as in the Indian power sector, issues keep cropping up, which I have seen for the last 3.5 decades. But I think we also resolve that. So therefore, from that angle, with the current situation, we reasonably believe there could be some delays, but not the capacity going away anywhere of what we're talking about.
And so far, you have not guided for FY19 volume numbers, but given the fact that they have only 1.1 gigawatt of order as it stands today, and if out of 1.1 gigawatt, I think you can execute maximum 500, 600 megawatt in this financial year, and you will need another 400 to 500 megawatt, to break even. So the issue of debt repayment which may come up in FY19. Can you please elaborate on that? How do you think?
Yeah, as we said, the 1135 megawatt is an unexecuted order, okay, after what we executed in Q1. So therefore, that 165 megawatt is not included in the 1135 megawatt. Second, this doesn't include the 760 megawatts where the PPA has been approved. It's waiting for the Section 62, the tariff fixation with the Regulatory Commission. So effectively, if you add these two, there's a 1900 megawatt which is available in hand, which is what we also thought of the execution this year and next year, which is definitely there. On top of it, as I mentioned in my comments, in the 7.5 gigawatts, what is already awarded, 20% of that capacity, the clients are still to decide who is the EPC service provider, which is roughly about 1,500 megawatts. We are in advanced discussions with some of the clients, and we do expect some success to happen there. So therefore, we are expected to increase our volumes in the already awarded projects. That will get added to this 1,900, 2,000 megawatts what we have in hand. Or two, captive, which normally happens gradually over the year. It doesn't happen right in the beginning. In fact, last year we booked 250 megawatts of captive, but that captive orders keep happening till December for execution by March. So while we keep moving, that captive orders would keep coming significantly. Third, if you look at whatever the orders, the bidding announced as on date with the clear timelines, even if some of them move a few weeks here and there, and once the order gets finalized, till now our track record has been, as I said, that we are the leader in bagging the EPC from the auction bid. So therefore, we are reasonably confident based on the track record that whatever capacity gets awarded, while we're expecting that the bidding is substantial this year. So I think we will close with the good order backlog this year, and the current year is what we already guided you.
Plus, we can add Gujarat bid will come in this month.
Yeah, in the states, at least the Gujarat is likely to happen as per information. They're already with the Regulatory Commission for revised bidding guidelines approval.
So is the timeline looking for the asset demonetization? Maybe can we expect in the next quarter, or is it likely to happen by end of FY19?
Do you want to fix timeline for that?
Yeah, I think part would happen in Q3.
Okay, sir. Thank you, sir. Thank you. Thank you.
Thank you. We take the next question from the line of Dhavan Shah from Qtr1. Please go ahead.
Yeah, thanks for the opportunity. I have two questions. Firstly, about the guidance, what you highlighted around 3,000 megawatt commissioning for the entire industry. So, assuming that the market share will remain at the same level, so is it fair to assume that we'll execute around or maybe commission around 800 to 1,000 megawatts this fiscal? Because I think the order backlog is the main concern. And we also discussed in last quarter about AP that the ratification, it is still pending. So what is the status over there and how can we improve the order backlog?
On the commissioning side, sorry, please go ahead. You cannot complete the question. Sorry.
Yeah. So because there is a concern in terms of the order backlog. So even though I think it seems that we can commission around 800 to 1,000 megawatt based on the market share what we are having, but it seems difficult based on the current order backlog. Maybe we can end up the execution or commissioning numbers as we did in FY18. That it seems like. So can you please elaborate more on this?
Yeah. On the commissioning side, if you take it, our commission capacity would have been substantially higher than the 19 megawatt what we gave it, because 250 megawatts of the Cheki 1 order which we are executing in Tamil Nadu is ready for commissioning. Only thing which is pending there is the power grid substation connectivity. Because the approval for that came only in July, and thereafter the process starts for signing your pay agreement and connectivity agreement and LTA agreement. Then you get the interconnectivity equipment drawing approvals. Then you place the order, get that equipment, and do the connectivity. In fact, here we took an advance action of talking to Power Grid, pending the connectivity, took that risk and went ahead and placed the order for interconnective equipment, which is our responsibility. But now the drawing approvals is happening, thereafter the Power Grid inspection, various things. So therefore that capacity would definitely get commissioned in September and October, 250 megawatt, which is not part of this 1135, which is a pending delivery order on this. Plus, there are some SAA orders, which we have supplied already. We have the direct site. We are waiting for the land and the foundations to be done by the clients, so that capacity will also get added. Plus, this 155 megawatt, what is supplied in the quarter one, would also get commissioned. So therefore, commissioning wise, you cannot look at what is the balance order book, because there's a substantial amount of work happened at site and ready for commissioning on it. So the commissioning one would be higher. And as far as the AP is concerned, as PT has clearly mentioned, what we are talking about and whatever we said will happen in this financial year, these are based on our clear order. It's not that our guidance is getting changed because we couldn't get the orders. These are all firm orders, including the AP. But because of some of these reasons of connectivity or the regulatory approvals, currently we are not able to envisage what is the timeline. So therefore, they are moving from FY19 to FY20. But there is no reduction in the guidance, whatever we gave it on this. Maybe whatever we're supposed to do in Q4 is actually moving to Q1 of the next year.
Okay, so is it fair to assume that maybe FY20 we can execute a commission between 25 to 2800 megawatt worth of contracts?
I wouldn't like to comment, but I would only like to comment that we are maintaining our market leadership in terms of the commission capacity, and like whole of last year we did 35%. Even in the quarter one we maintained our leadership, and we'll continue to maintain the leadership on this. As we talked about what the country is likely to do. So therefore, if the market is going to be so much, then being a market leader, it's obviously we could easily assume that what numbers we would be doing.
Okay. One more question is about the WTG EBITDA performance. So, based on the commentary, it is because of the poor execution, the EBITDA was in loss. So, if I look at the EBITDA loss, even excluding the forex impact, so it is around 75 crore for Q1 FY19. Vis-a-vis, if I look at just Q2 FY18 numbers, the execution was around 100 megawatt, but still EBITDA loss excluding forex was around 12 crore. So why the EBITDA loss has been increased for WTG segment?
If you want to explain?
Yeah. Q2 last year was definitely some of the PPA-based order we have executed, and that is why there was exceptionally high number. But basically, this business is something where if you try to compare on a quarter-to-quarter basis, there will be always some exception on a quarterly basis. This quarter, I would simply explain that if you take the fixed cost and compare with the volume of even quarter one of last year, the delta due to negative operating leverage you are getting is 11%. Had my volume been higher and comparable to quarter one of last year, probably you might be seeing EBITDA of 17-18% odd.
Okay. I think it's completely out of the fixed cost, the operating expenses. Even what is coming, if you just normalize for that, the EBITDA levels are, whether you compare on year-on-year basis or quarter-on-quarter basis, they're the same level.
And one more question is about...
Slightly better.
Yeah.
Yeah, please go ahead.
So one more question is about the debt repayment. So, the FCF is negative because of poor operating leverage. And we are on the track in terms of the asset monetization. So, and FCCB is going to mature also in the next year. So what's our plan? I mean, are we going to repay our borrowing in terms of the forex debt, or how are we going to repay the overall leverage in the coming year?
Kirti?
Yeah, FCCB is part of our plan for debt repayment. That is number one. And number two, so far as overall debt reduction is concerned, the sharing pattern is always decided by the lender that in the ratio of their exposure. So there will be some part payment of rupee debt and some part payment of forex debt.
Because I think the FCCB are unsecured ones. So is there any possibility that the secured creditors will demand to repay their money first? And then
we are confident that in the overall interest of all the stakeholders, bankers will take a practical view.
Okay, sir. That's all for me. Thank you.
Thank you. We take the next question from the line of Harshit Kapadia from Elara Capital. Please go ahead.
Thank you for taking my question and good morning, sir. Just to dwell more on this EBITDA number, would you be able to say that you will still be able to make double-digit margin for the full year despite you may be executing lower than what you had estimated because of the connectivity issues and the state regulatory approvals delay has happened?
If you want to answer? Anyway, I think fundamentally, if we didn't revise our guidance at this stage. So before you're asking the same question. Kirti, please go ahead.
Yeah, basically, it is our intent to maintain double digit. But as JPC said that we don't want to give any revised guidance at this stage, basically let us wait and watch. But we are confident that we'll be able to cross double digit.
Okay. And sorry to dwell you more on this execution part. So you mentioned that around 3 gigawatt of execution that you are looking for industry. If you can just break up from your side, which in SECI 1, 2, and will it be SECI 3 also be part of this year's execution somewhere? And how much would you be able to do from captive side?
No. See, the SECI 3 commissioning schedule as per the PTA itself is somewhere in November. I don't think the commissioning wise. So we're now talking about COD commissioning. We're not talking about supply. So therefore, I believe that's what your question is, because you're talking about 3,000 megawatts. SECI 3 would not come in here. SECI 1, the PPA date is the May. SECI 2, sorry. The SECI 1 would happen. I really don't know if there are any slippages for some other parties. SECI 1 will definitely happen. Some part of SECI 2 should happen. And the state bidding, whatever has already happened, concluded, some of those things will happen. And the captive. Captive segment is one which would happen. And also there are the carry forward things coming from the Q4 of the last year where, suppliers made and direction just started. Those things commissioning also would happen now. So that is how we gave our guidance of 3,000, and we reduced from 4,500 to 3,000 because of some of these delays in the state bidding and the central bidding.
Sir,
especially with respect to the connectivity delays.
Okay. So on the offshore wind, would you be able to give kind of the cost per megawatt that you are looking at, what is right now coming for?
I think it's too early stage to talk about that right now. As you know, that expression of interest has come in, and we have participated in that. There are more details because these are all depends upon these are offshore. So it depends. These are the project-specific costing would happen here, unlike onshore wind on this. So because the location-specific costs, marine costs are higher, those details once the government provides, and then we with our partner will look at those details, then that's when actually we should be able to comment about what is the likely cost of offshore in India. It is little premature at this stage.
Okay. Thank you, sir.
Thank you. We take the next question from the line of Nikhil Vaishnav from VD Investment. Please go ahead.
Thanks for the opportunity. I would like to know what CapEx do you see for FY19?
Yes, generally we don't require any capex for capacity addition per se because we are having adequate manufacturing capacity. The capex of company is primarily on two factors. One is a maintenance capex in mold and all those things, and the second is R&D capex what we have, and we believe that annually something around 300 crore should be sufficient.
Okay. And secondly, when will USA PTC commission taken place, and what will be revenue received? Slide 36, I think, in that you have given details.
Can you repeat your question, please?
Yeah. I can repeat. Yeah. Sorry. I want to know USA PTC commission taken place. So when it has taken place and what revenue you will receive from this?
No. See, USA, the PTC, what we have done is we have done the safe harbor. It's like a warehousing of a small quantity of project capacity. If we do in FY17, which would give us 100% PTC, but the projects to be executed before 2020. So therefore, right now we're in the stage of developing the projects, which will happen over the next couple of years. The revenues, you will start seeing revenues from maybe the FY20 onwards.
The revenue from FY20 onwards, right?
FY20 and FY21 for the safe harbor 1. And we have also done the safe harbor for the year 2, which has an 80% PTC, which is another 500 megawatts, which would have an year extra available for us to commission this project.
Okay. So that's it from my side. Thank you.
Thank you. We take the next question from the line of Abhik Puran from POR Investment. Please go ahead.
Hi. Hey, so if industry volumes are 3 gigawatts and 8 gigawatts for 19 and 20, so that's total of 11 gigawatts, how much do you think your company will get as a share of that 11 gigawatts?
If you look at the last 2 years, we have been at 32 and 35% of the market share. Okay, so therefore, that's our track record. So therefore, and right now, in winning the orders, we're maintaining the leadership. So it's reasonable to assume that we're not giving guidance for the next 2 years, but it's reasonable to assume that with that sort of a market share and this capacity is what we will be able to do it.
Okay. And in terms of, the next few, I guess there are a lot of moving parts in your order book, this Andhra Pradesh one and I guess the next few SECI 5 bid, let's say, when it happens, that auction. When do you expect to kind of know either way on the Andhra Pradesh execution? Will you know that in the next month or so?
Yeah. On the first one, on the 1135 megawatt, what we have, 90% of that order book today is through the orders. So it's a confirmed order. And also for each of these orders, our counterparties are very strong, as you mentioned, like they are international utilities. So therefore, we don't see any risk of them not executing the project. It's only a question of we're talking about the timelines moving backward here and there because of the connectivity. So therefore, there is no moving part with respect to the 1135 megawatt what we have in hand, except for a bit of a timeline here and there. As far as the Andhra Pradesh is concerned, it was actually held up because there was one order which he was supposed to deliver the order on this, which is called the OP5, which is with regard to the AP regulations, whether he is restricting those regulations or those regulations will continue till August 18 or whatever is the timeline what was available. That order came just a couple of weeks back where he said that these regulations don't exist, but I'll go ahead and still approve the projects on the cost-plus basis based on the CRC regulations. That has now come. And also, as we said, that they asked us to formally file an application for Section 62, because now we are filing Section 62 considering the CRC regulations, not the APRC regulations. So we revised these applications and filed for the entire 760 megawatts, the Section 62 petition. And they will go through the normal process. But in the regulatory process, as much as I'm aware, you are aware that, you really can't fix exact timelines. So, but it's reasonable to expect that in 60 to 90 days, the order should come because it's now we already submitted the petition for clarification.
Okay. And, you mentioned that these connectivity approvals came one day after that SECI 5 bid happened. So, do you have a date on when the next round of auctions will happen?
No, the SECI 6, which now they're calling as SECI 5, which they've already announced as a 1200 megawatt. And in fact, before that, the 1200 megawatt bid of NTPC is due today, as we speak, on 6th of August. And the next 1200 megawatt, which is SECI 5, they're calling it as SECI 6 to SECI 5, whichever way you call it as, next round of SECI bidding. Let me take it that way, rather than getting into 5 or 6 or things like that. The date has come as 24th of August. So that's the idea. See, one of the requests which industry players have been telling the SECI is to keep at least certain time gap between the two rounds of bidding, or at least till the reverse auction happens. Because the site, if you're putting your bid based on a site-specific thing, so those sites get locked up till the order is finalized. So therefore, you won't be able to offer that site in the next bidding. So that is the reason I think NTPC being 6th, they put this one on 24th. So that before that, the NTPC reverse auction will happen. That's why we see the time gap between NTPC and the next SECI bidding.
I see. So for this NTPC auction, do you have pre-bid tie-ups in place?
All our orders till now, I don't want to talk about NTPC per se because the bid is happening today. All the orders of 1400 megawatt what we got through the bidding, 97-98% of that came through pre-bid tie-ups. We hardly had anything on this. Only thing now is as I mentioned some time back, in the 7.5 gigawatts what is ordered, there are people who have bid without any tie-up of EPC, or they had some loose tie-up and you still work out post-bid. They are out in the market, which is about 30%, about 1,400 megawatts, which is what we are trying to do. Otherwise, as far as we are concerned, predominantly it's a pre-bid tie-up is what our track record has been. So I see that same thing would happen in the moving ahead.
Okay, and just to clarify, for the NTPC total kind of orders up for auction, your share will be kind of similar to what you've had historically?
See, it's difficult to say who it depends upon who's going to win. See, there are some industry players who we all know that they don't do a pre-bid tie-up and go and win and then to the post of this. But yes, we are reasonably confident that even in this auction as well and also the SECI 5 auction, we would have the leadership in terms of getting the EPC orders. We will be the number one in both, in terms of the share.
Okay. Got it. I guess, one request from our investors' point of view is that the order book is a very useful way to track your business, and there are a lot of moving parts, obviously. So as and when you get new orders, can you just give a disclosure to the exchanges on what the order book looks like?
We do that. We do that regularly.
Okay. And
whenever
my
we
next
close
question,
our definition of order is that, once we sign the order and we get that once, we do it to stock exchange. We make it public.
Great, thanks. Hey, this for EBITDA margin, you said it should still be double digits for FY19. What is the kind of minimum supply of WTGs that you have to do in order to get to double-digit EBITDA margin?
If you want to answer that, break-even WTG?
Yeah, basically I would not prefer to go into a specific megawatt number at this stage since we have already withdrawn guidance. Otherwise, it would tantamount to giving you revised guidance.
Okay. Okay. Fair enough. Yeah, that's all from my side. Thank you.
Thank you. We take the next question from the line of Vipul Shah from Ripple Wave Equity. Please go ahead.
I just wanted to know, in the light of these revised, or the light of the AGM shooting down and specifically non-public institutional shareholders voting against the fundraise, both equity and debt, what is the plan for the company if at all it wants to, again pursue the fundraise?
Yes. Basically, first of all, I wanted to clarify that these were only enabling resolution and there was no plan for a specific plan for any dilution. Okay. So it is not impacting something what we have planned from a debt reduction point of view. That is number one. Number two, that in case there is a requirement for fundraising at appropriate price point, then we are sure that we would be able to get shareholders' support for a specific proposal.
Okay. Yeah. Thank you.
Thank you. We take the next question from the line of Vinod Chandra, individual investor. Please go ahead.
Thank you. My question is already covered, so I am good.
Sure, thank you.
Thank you.
We take the next question from the line of Puneet Gulati from HSBC. Please go ahead. Mr. Puneet Gulati, your line
Yeah, hi.
is
Thank you so much. Just if you can give some more color on why NTPC earlier auction was pushed and Gujarat got cancelled, and if you foresee a risk of any other auctions having the same fate.
No, NTPC got pushed back purely because of, as you saw that what happened to the SECI file. And they knew that connectivity is an issue, let the connectivity issue get resolved so people will come in for bidding. That's the reason that NTPC got pushed now, because now we said that connectivity issue is done. As far as Gujarat is concerned, our understanding is that there are some changes to the standard bidding guidelines which they want to bring out. So whenever there is a deviation from the standard bidding guidelines issued by the Ministry of Power, they ask the Electricity Act, you need to go and get a pre-approval from the state regulators. So I understand they are going through the process. So once they do that, they will announce the revised bid date.
Okay. And then apart from the SECI auctions, do you see the traditional states coming back in this regime, or are they shying away at this point of time?
See, right now we're not seeing any traction in the state bidding other than Gujarat, because the current bid condition is that in the SECI, anybody can buy power, any state, including the windy states, can buy power from the SECI bidding on this. So right now we are seeing is that some of the states like Madhya Pradesh and Maharashtra and things like that, even contemplating buying it from SECI. So at least we are not seeing any traction in the state bidding at this stage as we speak, other than Gujarat.
Okay. And just a couple of accounting related issues. You adopted Ind AS 115 and you stated that, your profit would have been higher. Can you help us understand the impact here?
Yes. Basically, what happens that whatever is the liquidated damage or sales commission or those kind of performance guarantee related things, all those things are now getting deducted from revenue. So basically your revenue line is getting impacted. Previously it used to be part of your expenses.
Okay. So this, at EBITDA level things wouldn't change?
Yeah, in absolute number EBITDA level things wouldn't change, but your denominator sales line will get reduced.
Okay. And also can you help us understand,
It's practically a regrouping, I would say.
Oh, okay. Okay, that's all. Okay. And then on the exchange loss, apart from the debt, what else is leading to this foreign exchange loss?
I think primarily it is debt because previously you know that in previous accounting regime, what used to happen that even if there is a loss on a quarterly basis, that got spread over maturity of a particular loan. But what happened that we refinanced our SPLC in March 2018. So it happened in a new accounting regime and hence the full impact, whether positive or negative, comes in a quarter itself. So that is going to have impact in every quarter, unfortunately, positive or negative.
Sorry, so you have to adjust you have to flow that debt change in every quarter?
Every quarter, yes.
And you can't capitalize it?
You can't put it in I would say, spread over a maturity period, yes.
Okay. But I thought there were two elements of the forex loss in the P&L statement. One was related to the interest cost and other was the other. So other is for the debt part. Is that understanding right, or is that?
Yeah, it is a combination of many things, but primarily the major portion is on account of debt.
Okay, great. That's all from my side. Thank you.
Whatever is the interest liability increase due to FX movement, that goes into interest directly.
Okay, and the debt related part is the other forex.
That's correct.
Okay, that's great. That's all from my side. Thank you.
Thank you. Well, ladies and gentlemen, that seemed to be the last question for today. I would now like to hand the conference over to Mr. Tulsi Tanti for a closing comment.
Thank you. We appreciate all the investors' interest and participation and the concern of some of the dynamic situation of the sector. Just to give a more clarity on the sector point of view, there is a very clear visibility of the business, but on a preliminary, is that some of the teething problems between the stakeholders is happening, and because of this, some of the delay. Like SECI 5 was cancelled because of 10th, the bid was there, and 11th and 12th, all the SECI 1, 2, 3, 4, the PGCL approval was cleared. So because of that, on 10th, there was no visibility of connectivity for all earlier bids, and that's why low participation, and that's why naturally it concerned. Again, it will come in the August, and it will continue the bidding process. Second, the NTPC is further delayed because most of the sites are used for each bidding. So it required some distance between two bids so that whatever the sites has not qualified in the one earlier bid, that will be reutilized for the second bids, and that's why NTPC has delayed. Third is Gujarat new bidding guidelines they have to adopt in the bidding process. Not only that, they are moving from 500 megawatt to 1000 megawatt planning. So because of that, there is a change is coming, and that bid will also come in the current month after the approval of the Gujarat's GRC approval. So the momentum will be continued. So there is no big uncertainty of the volume, only the delay or deferment is happening, and that will affect the one quarter performance will move from current financial year to next financial year. By the way, the same thing is bringing more stability of the systems, which will give the good momentum to bring more and more bid faster and everything, because all India base is quite good demand is coming from the SECI, because most of the state need more and more energy, and the supply is not that much enough is there. So the demand side is good. Investor participation is a good. And because of that, once the system will stabilize, the volume will stabilize. Not only that, price will further improve and stabilize also. That will give the good visibility for the next the 3 years. It's a temporary phenomena. It's disturbing because we are moving from one established 20 years system of FIT to the new systems of the bidding regime, and it took almost the 15 months till now. So maybe another 3 months it's further it may take, and after that it will be stabilized, so which is a good, giving a big volume opportunity for the sector. With the newly discovered tariff, wind energy is the most competitive with the respect of the all other source of energy and has emerged as a mainstream energy source. Going forward, we are well positioned to capitalize on the market opportunity with the competitive business model, the project execution experience, the spinning over the 2 decades across the India, the state-of-the-art technology and very competitive value chain and supply chain within the Indian market, new generation turbine offering the higher PLF and cost competitive and lower LCOE, which is giving a competitive edge going forward, the presence across the entire value chain, and the more than 12,000 megawatt service asset portfolio and capability of the service and state-of-art service. We are fully vertical integrated the operation, giving us a very good competitive edge and faster execution capability because of that. So technology and innovation will remain to be the catalyst that will drive the growth in the renewable energy sector. And as you know, in the product and technology specific Indian market need of the technology, we are ahead in leadership on the bringing the right product and technology for the Indian market, because we understand the geography very well, and we have more than thousands the measuring McMaster information and statistics and data based on that, and the ground profile information, what type of the right product and technology is required. So it's a quite huge difference is there. So any turbine is required to become a competitive, it's need for the Indian specific. So we have a great experience in the last 20 years. With the government very high trust and focus, the country is experiencing a positive winds of the change in the energy sector and particular in the renewables. And it will continue for the next 5 to 10 years. With that being said, I thank you, all of you joining us on the call. We hope all your queries are answered. In case of any further questions, kindly get in touch with our IR team. We'll be very happy to answer your any question or any query. Thanks a lot, and we appreciate your time and presence with us. All the best wishes.